Introduction to Fundamental and Technical Analysis, presented by WallStreetSurvivor.com. We use fundamental and technical analysis as tools to determine whether an investment is attractive. Say you're evaluating 4 companies but only want to buy shares in one. You have 2 ways to look at it, from a fundamental or a technical standpoint. Fundamental analysis takes into account the most basic aspects of a company's financial strength and compares them against its competitors. If you use fundamental analysis to evaluate a company such as Microsoft, you would look at financial statements, management team, products, competitors, and industry. Technical analysis takes into account past trends to predict how a company will do in the future. If you use technical analysis, you would look at price, volume, and charts. To learn more about fundamental and technical analysis, let's look at Joseph. Joseph is interviewing for a sales job at 2 companies. The first interview is at Pet Heaven with Tom. Tom believes the best way to evaluate Joseph would be to look at his qualities. Tom looks for things like his personality, his GPA, his intelligence, and his career ambition. This is a lot like fundamental analysis. Joseph goes to his second interview at a local paper company and meets with Andrew. Andrew believes the best way to evaluate Joseph would be to look at whether he is on the upswing of his career. Andrew only looks at previous work experience to make his judgment. This is a lot like technical analysis. Just like Tom looked at Joseph's qualities to evaluate him, fundamental analysis takes similar factors into consideration. On the other hand, Andrew's method of only looking at prior work experience is much more like technical analysis. So that's the difference between fundamental and technical analysis. To learn about these concepts and more, sign up for a free account at WallStreetSurvivor.com.